Good evening, you're watching CNBC-TV18 and this is After the Bell. Let's take a look at the top headlines that we are tracking for you this evening. Of action over the next 30 minutes, but first let's get started to the Lal Street action, where markets seem to consolidate today in a range after a strong rally from last 2 days. So after a strong start, Nifty consolidated in a range. So seesawed between red and green before finally ending completely flat with a negative buy. So Sensex also ended flat, as you can see on your screens. Broader markets outperformed though. So Bank Nifty today rallied about 170 points, while mid-caps ended with gains of about 150 points. Anuj Singhal is here with a wrap of today's trading action. Anuj, it was a subdued day of trade, but at least in some indices you saw some form of correction and making up for the losses that were incurred yesterday.
Well, good day for the market, not perhaps entirely reflected by the Nifty, but mid-caps did well. That was one good thing. Bank Nifty outperformed and IT was down, of course, because rupee was very strong today. The banks were doing well. Yes Bank, Axis, IndusInd all higher, while IT was down. So HCL Tech, Infosys, Tech Mahindra on the lower side. Other index gainers today included Larsen after the numbers. Hindalco was higher and so was BPCL. On the losing side, you had names like Dr. Reddy's, Bharti Infratel and Cipla. There were some large gainers in the F&O space. The top two gainers, perhaps not the best quality ones, but PC Jewelers and Reliance Communications were higher. BEML was higher, Shrey Infra, Adani Power. And a lot of good quality names are seeing traction. Names like Escorts, United Spirits, IGL and NBCC. On the losing side, you had names like Exide, Canara Bank and Hexaware. All in all, you'll have to say that the basic thesis that perhaps the markets made some kind of bottom is intact, the way a lot of these good quality mid caps are outperforming, and the fact that every time there's a bit of a dip, that is getting bought.
Okay, so yes, it was a muted day, but we did see some amount of correction in the market. Thanks, Anuj, for taking us through that. Now, from equities to the currency market, rupee has staged a strong recovery now. So the Indian currency has opened in the green at 73.87 per dollar, right now at 73.59 per dollar, versus yesterday's close of 73.95. So that's the rupee market for you. A little bit of cheer over there. But here's some more news for cheer. GST collections for the month of October have crossed 1 lakh crore rupees for the first time this fiscal. It's also the second time that the tax collections have crossed 1 lakh crore rupees since GST actually came into effect in 2017. So the GST mop-up in March, which was reported in April, had touched 1.3 lakh crore rupees. Finance Minister Arun Jaitley tweeted, and I'm quoting now, "The success of GST is lower rates, lesser evasion, higher compliance, only one tax and negligible interference by taxation authorities," unquote. While collections have increased on a monthly basis, they are still below the government's asking rate of 1.15 lakh crore rupees as per the budget estimates. Let's go across to Sapna Das for more details and the number crunching. Sapna, can this momentum be maintained is the real question.
Well, definitely some good news on GST revenues for the first time in the current financial year. The number is now above the psychological benchmark of 1 lakh crores, slightly above that. Having said that, well, around 49,000 crores has come in as a CGST share for the centre and around 53,000 crores for the SGST. This also, of course, includes the provisional settlement that has been done under the IGST funds, distributed around 30,000 crores between the centre and the states. Difficult to say whether this is going to be a trend. Very unlikely that this is going to be a trend. But the expectation within the government is that probably the next month also, you may see the revenue collection of GST around the same level, in that close range. But definitely not a trend for the current financial year. The internal target, the monthly internal target is around 103 to 105 lakh crores for GST. And we are still around the psychological benchmark level of around 1 lakh crores. So I have to really wait and watch and see how the numbers pan out post-December. But expectation is next month also it may be in the same range.
Okay, so perhaps that number can be maintained, and Mr. Jaitley got that point correct. Thank you, Sapna, for taking us through that. Here's another exclusive. CNBC-TV18 has been reporting that in order to strengthen India's corporate governance framework, the centre has been working on amendments to the Companies Act. On Wednesday, we told you that the Union Cabinet was set to take up these proposals. Now, sources tell us that the Cabinet has in fact cleared these amendments. Timsy Chapure, who has been tracking all these developments, is here with the details. Timsy, when will we get an official confirmation on this?
Well, the cabinet today has cleared the proposal mooted by Ministry of Corporate Affairs to bring in amendments in the Companies Act 2013. And what they have through this amendment proposed is how to decriminalize almost 83 offences. There was an entire report submitted by Corporate Affairs Secretary Injati Srinivas, and almost the entire report as is has been cleared by the cabinet. But all these amendments will be brought in through an ordinance. They are now waiting for a presidential nod, which is likely any moment. And through these, some of the major aspects of these amendments, let me now put across those, is how to curb remuneration of directors, how to bring in more accountability for directors, independent directors, and how to bring in more corporate governance within the boards to avoid any crisis-like situation. So all these are relevant with the current situation where we are seeing the entire IL&FS crisis, where we are seeing a lot of frauds coming up. So government is trying to strengthen the Companies Act so that all these cases can be avoided in the future. But let's see how soon President Assent comes in so that the ordinance can be promulgated.
Okay, Timsy, thanks for that. So a little later today, we can expect the presidential nod on that big change in the Companies Act. More from the policy space, we learned from sources that the government will soon start the next tranche of free capitalization for public sector banks. However, the decision on the amount of capital infusion will be taken only after studying the second quarter results of all the banks. So remember, as far as this current financial year is concerned, the government has infused close to 19,000 crore rupees in public sector banks, and after the latest quarter figures come in, we are expecting another round. Moving on to earnings, HDFC Limited reported a stable set of earnings for the second quarter. Net profit jumped about 25% on an annual basis, while the net interest income saw a growth of almost 16%. Asset quality remained largely stable. Abhishek Kothari, who has been doing all the number crunching, is here with the details. Abhishek, take us through the highlights. It seems to be a stable second quarter.
HDFC Limited reported its Q2 FY19 numbers, and the numbers didn't look too good in terms of the cost of funds that have increased. Now, to explain that, the AUM increase was 2% on a sequential basis. However, the interest income was up almost 6% on a sequential basis, but the interest expenses, that is the cost of funds, increased by 10% on a sequential basis. So this rising cost of funds for the best lender did not go down too well with investors. They also had an expected credit loss of 401 crore. That is compared to about 20 crore in the previous quarter. However, the one-off income with respect to an income of 1,000 crore offset this expected credit loss. The net interest margin remains stable, while asset quality improved on a sequential basis as gross NPA ratio declined to 1.13% versus 1.18%.
Okay, Abhishek, thanks for doing that number crunching for us. We will have to take a very short break, though. On the other side, an exclusive interview with former Cabinet Minister Arun Shourie, who says that the Attorney General would be ill-advised to say on affidavit that the Rafale jet price can't be revealed. Stay tuned. Come back, yesterday after the bell on CNBC-TV18. Now, it's the 1st of November and several auto companies have released their sales for the month of October. The first reading tells us that sales have been muted, with Maruti Ashok Leyland posting weak sales with bright spots seen in M&M and Escorts. Utkarsh Advedi has been tracking these details, and he's here with the number crunching. Utkarsh, you have been reporting consistently that demand is expected to be muted this festive season. Take us through what the numbers suggest.
Exactly, Kritika. As you said, we have been seeing that there is pressure on retail at dealerships, and now you can see the pressure really going into the auto sales number. Remember that these auto sales numbers are wholesale numbers. That means the cars which reach the dealership. This is not the number of the cars which are being sold at the showroom. And now if you look at Maruti, remember that Maruti has been leading the market with around 15% growth, and that is why the market was seeing a 10% growth. Look at Maruti now. This time it is a flat sales growth for Maruti. It has happened after a very long time. Within a festive season, Maruti has grown flat. In the past 2 months also, the performance has been same. In fact, the exports also have taken a hit. It is 17% down at this point of time. So total sales only 0.02% up. Also remember that Maruti has not seen any new product launch except the CRs faced in the past 2 to 3 months. That is also having an impact here. Then speaking about the M&HCV sales, the M&HCV sales are doing good. The commercial vehicle anyhow does not have any relation with the festive seasons, but they are still in a healthy track. If you look at Ashok Leyland, they are also up around 17%, and then also in the LCV space. Now speaking about M&M is up, M&M is up because of the Marazzo impact. They have launched a new vehicle last month, and that is why once you launch a new vehicle, you have to get it shipped to the dealerships, and the restocking is what is visible in the numbers. So at this point of time, if you look at M&M numbers, they are 14% up. But that is, as I said, has to do a lot with the Marazzo impact as well. So we will have to really look at the breakup of all the other cars and SUVs of M&M, how good they are doing. But at this point of time, if you see, M&M has grown by 14%. Also speaking about Escorts sales are up around 28%, and even the total sales are month on month are up 23.7%. But if you look at this point of time, what the data is from the last 4 to 5 companies, this is going to be one of the worst festive seasons in the past 2 to 3 years at least, especially with Maruti leading the pack down.
Okay, well, the numbers seem to say that story exactly, Utkarsh. Thanks for that. But, stay with us. You've been tracking another story. In a crackdown on shell companies, Mumbai ROC last month had deregistered over 25,000 companies in the registry. Sources tell us that more will be added. Utkarsh Chaturvedi is here with the exclusive details. Utkarsh, what are the grounds for deregistering of these 25,000 companies, and do we know by when the 40,000 more companies are likely to be identified?
Exactly, Kritika, as you said, around 25,000 companies have been deregistered in the month of October. The grounds has been one that the MCA believes that these companies were redundant. They are hesitating to use the word shell companies here, given the fact that there is no legal definition for shell companies. But what they say is that these companies were redundant, and how did they come to the conclusion was that these companies have not been filing annual returns from the last 2 years. Now, this is a part of the whole MCA drive against shell companies, and the idea is to close as many as redundant companies possible, because as they say that having a shell company is not a crime and it is not criminal, but shell companies are used for criminal activities. So what MCA is really doing is closing down and cracking down of these redundant companies so they don't end up being used for any criminal purposes. As you said, around 40,000 companies at this point of time are also on the radar of the Mumbai ROC. What we are picking up is that they are just doing the scrutiny at this point of time, and it will be in the next 2 months that they will be coming out with the list of 40,000 companies as well. So, and if you remember, in the month of September itself, MCA had deregistered 2.1 lakh companies from all over India. So the drive continues, leading from Bombay and Kolkata is what we pick up. Both of these cities have the most number of these kind of redundant shell companies, and this is going to continue at least till the end of this year.
Okay, fair enough, Utkarsh. As you were pointing out, it is shell companies that are used for money laundering. So a shell company is not illegal, but of course money laundering is. Thanks, Utkarsh, for taking us through those details. Here's an exclusive interview. A day after the Supreme Court asked the government to submit pricing details of the Rafale deal, Arun Shourie, the former union minister and one of the 3 petitioners in the Rafale case, tells us that the government will be ill-advised to say on affidavit that it cannot do so. He also went on to refute the government's argument that the price details are not disclosed to the parliament. He also justifies the need for a Supreme Court monitored probe on the Rafale deal. Let's hear out what he had to say.
Joining us today for a discussion is Mr. Arun Shourie, former union minister. Mr. Shourie, thank you very much for speaking to CNBC-TV18. We'd like to begin by asking you about the Rafale deal. How significant do you think is this move by the Supreme Court to demand the pricing? Because there are now media reports which say that the government will not reveal the pricing and say this can't be done.
No, but they've asked for 3 things. First, they said, yes, we have read what you said on procedure. We have read the other people also. And therefore, first give us more details on procedure. Second, on pricing, that you tell us how the price was arrived at. And when Mr. Venugopal said, sir, that is confidential, he said, say that on affidavit. And I think that Mr. Venugopal would be ill-advised to say it on affidavit, because the fact of the matter is that, let's say, Parikar's own statement, immediately out saying, oh, we couldn't buy 126 planes because that would have cost us 90,000 crores. That comes to a price of 715 crores per plane, no problem in division. Second, the Minister of State for Defence, in answer to a written question, a written reply in the Parliament, has disclosed the price, saying it is 670 crores per plane. Third, this Dassault and Reliance, they have disclosed the price in their financial statement and in their annual report, saying it is 1,660 crores per plane. And then the security clause in the agreement does not relate to price. It relates to the technical specifications of the plane. And therefore, Macron, when he was asked, he said, well, it is entirely up to the Indians as to how much they want to disclose. So in the face of all this, for Mr. Venugopal to say, we cannot, to say on affidavit that we cannot disclose the price would be very strange. And it would also be a reflection of what the government thinks, that they cannot, that even the 3 judges, including the Chief Justice of India, cannot be trusted with commercial information. Just imagine.
The other big question, sir, you've asked for a Supreme Court monitored...
No, third thing they said is, how did this offset business, how did this private party come in? So give us details. And give us details and given them to the advocates and the petitioners in person like us. So this is, Venugopal said, sir, then some Official Secrets Act, some information may be covered with that. He said you can redact that. But then give us both statements. Then we will, that means that the Chief Justice and his companion judges will see that have they withheld information from us which should be in the public domain. So how much farther can anybody want an order? It's a very significant order.
Very significant order. You've also asked for a Supreme Court monitored CBI probe. Did the happenings within the CPI over the last couple of months prompt you to ask for a Supreme Court monitored CBI probe, sir?
No, from the very beginning we have asked for a court monitored thing because we know the conditions under which the CBI functions. But certainly the happenings in the last few days strengthen that. And Justice Gogoi, I mean, half laughing, he said, you have to wait for that. First, let the CBI set its own house in order.
The government feels that this is not an embarrassment. That's what all the BJP spokespersons say. But that one line where they said that let the CBI probe wait, let the CBI put its house in order first, what kind of message does that send out?
That they are dealing with the CBI in another matter, that's all. And it's true. Supposing the CBI were to be asked to inquire into it just now, yes, Nageshwar Rao and company will kill the investigation just now. So it's very good that the thing should be sorted out, cleaned up, and then our matter should be taken up.
All right, time for a very short break. On the other side, we get you an exclusive chat with the Managing Director of Mondelez India, Deepak Iyer, on company's India plans. Welcome back to After the Bell. Now, the latest in the crisis at debt-ridden IL&FS. Sources tell us that the government has asked IL&FS to complete its first asset sale in the next 2 months. The company had appointed Alvarez and Marshall to chart a revival plan, and that report is likely to be submitted in 3 to 4 weeks. Now, based on those recommendations, the new board under Uday Kotak will approve monetization of assets, and the first such sale is likely in 60 days. The government is hoping to turn the company around in 6 to 9 months' time. Staying with the IL&FS issue, newly appointed board member G.N. Bajpai has stepped down, citing personal reasons. The appointment of the former SEBI chairman had raised a few eyebrows as he served as an independent director at the now defunct Kingfisher Airlines. An SFIO report had criticized the role played by independent directors at Kingfisher. So while he has cited personal reasons, this could be an important background to that. Now on to the battle within the CBI. Today, the investigating agency told the Delhi High Court that the bribery charges against Special Director Rakesh Asthana was a cognizable offence and claimed that they are in possession of incriminating documents. The CBI went on to tell the High Court that it was handicapped as certain files were being scrutinised by the Central Vigilance Committee. Now on to an exclusive interview. Per capita chocolate consumption is low in India and competition will help fuel demand growth. That's the word from Mondelez India's Managing Director, Deepak Iyer. In an exclusive interview with CNBC-TV18's Priya Sheth, Deepak Iyer also expressed confidence that the chocolate maker will witness strong demand during the current festive season. Here's an excerpt of that exclusive interview.
India is strategically important not just because of the growth, but also because our highest market share is here. It has been a bed for innovations. So the world first in terms of rough chew fuse was from here. The world first on mom to kids or donor in terms of lickables is from here. So India is strategically very, very important in the whole context. The way we are looking at it is, how can we fulfill our role of being the growth engine as far as AMIA, Asia, Middle East, Africa, or the globe is concerned. And that's what we have been super focused on. And towards that, we have left no stone unturned. The kind of investments we have made, whether it's RDQ Center, whether it's the IT hub that was invested in, whether it is investments in sales and distribution, whether it's investment in brands, whether it's investments in innovation, we've done it all. So I think we really want to be a part of this entire growth story.
We've seen Hershey's bring cases to India, lots of global majors bringing their chocolates to India. Does that concern you?
No, actually, to the contrary.
Do you see it's a sort of cannibalization of market share happening?
I don't think so. See, I think every competitor who enters the category is most welcome as long as they help grow the category. Today, the per capita consumption of the category is so less in India, 100 grams per person per annum, whereas developed markets is 5 to 10 kilograms. So the amount of work that the category needs to do to become a routine snacking and grow consumption is huge. And it's not that Indians don't have sweets. There are different kinds of sweets, right? So I think it will be very limiting to look at competition as depleting or whatever. I think I would look at it as enabling category growth, and hence how do we fuel category growth going down the line.
Festive demand, I can't let you go without asking you about that. What's the response so far, and what do you feel will be the kind of demand going forward?
See, we had a super Rakhi. So I think, we were very, very bullish about the festive season. Yes, there's a lot of reports in the press that there's been some bit of dampness over the recent weeks. I'm not too sure why. However, as far as we are concerned, so far we haven't seen that impact us. But I think the jury is out. It only by mid-November we really come to know how good the festive season was. So once the offtakes are there, and then we check the stores.
Okay, so Indians aren't having enough of chocolate, and that's not necessarily great news for Mondelez, but they're bullish on what lies ahead. We will have to wrap up this show on that note. On the other side, we'll get you Markets Today talk back with all the market action of the day and what you should be gearing up for tomorrow. Stay tuned.